HEALTHCAREONOMICS, changing healthcare by changing the way you think about healthcare. Why is my health insurance going up so much every year? Many Americans hold the Affordable Care Act solely responsible for rising health insurance premiums. But does it really deserve all the blame? Actually, no. And yes. It's not like the price of health insurance wasn't rising before Obamacare. In fact, by the time the ACA was passed in 2010, premiums had already been steadily going up for decades. But the Affordable Care Act kicked this trend into turbo mode and led to the situation where today, many Americans are paying as much for health insurance as they do for their mortgage. So what was it about the Affordable Care Act that caused health insurance to become so unaffordable? To put it simply, commission. Commission can be defined as an amount of money, typically a percentage of the value involved, paid to an agent in a commercial transaction. Or another way of putting it would be, getting paid on commission means that the more you sell, the more you make. There are lots of professions out there that get paid through commission. Food servers and bartenders earn a type of commission in the form of tips. Realtors get commission based upon the sale price of the property they're representing. And insurance agents are paid a percentage of the policies that they sell. That includes health insurance agents too, which is why they're incentivized to sell you the most expensive policies. More on that in a separate video. And ever since the birth of Obamacare, health insurance companies have been paid on a commission basis as well. This is quite a change from how health insurers worked prior to 2010, when they made their money in large part by denying and delaying payment for the diagnostic tests and treatments that healthcare providers wanted for their patients. If you've ever known anyone who had to wait 6 weeks to get an MRI, this is why. And although that way of doing business may have been very, very bad for patients, it was very, very good for the health insurance companies who, by refusing to pay for covered healthcare services, were able to hold on to more and more of their money. Then came the Affordable Care Act, which changed all that. Under that law, you know, the one signed by President Obama, who said,
I do think at a certain point you've made enough money.
Yeah, he really did say that. Under that law, the federal government of the United States of America tried to put limits on the profits that health insurance companies could make. I said tried to because it didn't work, like at all. In fact, quite the opposite has happened thanks to the medical loss ratio, or MLR, one of the key components of Obamacare. According to healthcare.gov, the medical loss ratio is a basic financial measurement used in the Affordable Care Act to encourage health plans to provide value to enrollees. Okay, what does that mean? Read the fine print in which the MLR limits the profits that health insurance companies can make by forcing them to pay out a minimum percentage of the premiums they receive toward the claims filed by doctors, hospitals, and other healthcare providers. Which means that these giant companies, who take in hundreds of billions of dollars a year in premiums, must then turn around and hand 80% of that money back out again to pay for healthcare services. Now, this may sound great in theory, but in practice, the medical loss ratio has been a disaster. Sort of like communism. Let me break it down. If a health insurance company has to pay out 80% of the money that it takes in, then that means it gets to keep 20% of the money that it takes in. It's sort of like being paid on commission. Yeah, and remember, being paid on commission means that the more you sell, the more money you don't have to leave on the table. So unlike the days of yore when health insurers made their money by paying as few healthcare claims as possible, now the more they pay out, the more they get to keep. You could say that, in a way, the medical loss ratio has turned paying healthcare claims, no matter how outrageous they may be, into a very profitable endeavor for health insurance companies. So with the Affordable Care Act, we got a law that requires every American to buy health insurance. And at the same time, that law forces health insurance companies to make their profits by paying off every overbloated healthcare claim. What could possibly go wrong? Well, the more health insurers get to pay out in healthcare claims, the more they get to charge you every year in premiums. And that right there, friends and neighbors, is why your health insurance premium keeps going up and up and up. For HealthCareOnomics, I'm Dr. Kevin Wacasey.